In the books of Gita Company, Gita and Company, Satara branch account. Satara branch account, uh, branch debtors account, and branch petty cash account. Branch debtors account and branch petty cash account. Okay, so let's start posting the items. We have on the 1st April 2006, two balance brought down. Stock is 20,000. Uh, Debtors are 15,000. Furniture 10,000. Furniture 10,000. And petty cash is 200. Petty cash is 200. So on stock, we need to calculate the stock reserves on the other side. By stock reserve, which is the loading or the profit element. So right now, instead of doing that calculation, I'm just going to directly do, if I take 20,000 into 1/5. Otherwise, I would have done, sorry, 20,000 into 1/5. Otherwise, what I would have done, I would have said 20,000 is at 125. For 25, it is how much? Should have been 20,000 into 25 upon 125. 25 upon 125 is 1/5. How I've directly got this is from here. 25% is 1/4 in terms of fractions. Increase it by 1. 25% on cost becomes 20% or 1/5 on selling price. Okay, so that comes to 4,000. Similarly, we have debtors and petty cash opening balance. $15,000 and petty cash is 200. Next, goods returned by debtors 800. So by returns in debtors, then we have goods invoiced to branch 50,000. Two goods sent to branch account as on 31st March 2007. Two goods sent to branch account, which is 50,000. This side we have 31st March 2007. Buy goods sent to branch account, in brackets loading, and here we will have it as 50,000 into 1/5. Somebody has not understood how I've got this 1/5, please let me know. So that comes to 10,000. Then there is goods invoice to branch return, goods returned by branch 2,000. Buy goods sent to branch account 2,000. Again, we'll have to calculate loading on this. 2 goods sent to branch account. See, uh, Nazreen, 1/4 is on cost. Okay, cost plus 25. That means 25% is expressed as a percentage of cost. But we know all the selling price because this is all at invoice price. They've said here goods are transferred for sale at Satara at cost plus profit. Cost plus profit becomes your selling price or invoice price. So if the percentage is stated on cost, we need to convert it to selling price. So right now they've said 25% on cost. That is 1/4 on cost. So since we have only selling price here, we have to take it as 1/5. Now say suppose they had said 25% on sale. Okay, that's I think I've done one problem like this, 25% on sale. That time I've not have converted. I've taken 25% of 1/4 itself. Why I have to convert it to 1/5? Because it is stated as a percentage of cost and we can't use this percentage because this is at invoice price. So we can convert it to that. We convert it to what it would be on sale price. And I've shown you the conversion. Okay, I've done it in the previous problems. You don't need to do it in every problem. Now, if something like now for example, if you get a fraction like 30%, sorry, you get a percentage like 30%. Now 30% cannot be converted into a fraction. That time you will have to do the working. Or say suppose you get a percentage like 55%. You don't know what 55% is in fractions. So you will have to do that working. You will get a fraction, but you don't know offhand what it is. 25%, 20%, 50%, 33.33%. We know this in terms of fractions. Okay. Then, uh, goods returned by branch 2,000. So I was calculating the loading on this. That is 2,000 into 1 by 5 comes to 400. 2,000 into 1 by 5 comes to 400. Then there is bad debts, that is 500. Then cash sales 3,000. This I will transfer directly here. By cash. Okay, these are sales 3,000. I'll put it specifically as cash sales. We'll also have receipts from debtors there, which we need to find out. Now, reserve for doubtful debts. Now, probably if I just ask you a question, you will all tell me. Audrey, are you typing something? Reserve for doubtful debts. If I just ask you, you will tell me it goes into the debtors account. Okay, but reserve for doubtful debts doesn't go in the debtors account. Okay, I just keep that item towards the end and then you will come. I'll explain to you once we are done with the debtors account why it doesn't go in the debtors account. Okay, so we'll just skip that item for now. I'll complete the debtors account and then I will show you why it cannot go in the debtors account. So we'll come back to that a little later. Allowances to debtors 900. Allowances to debtors 900. These are like discounts that are given. Branch expenses paid by head office. This is what we need to take. So we can assume it's to cash or to bank. I normally prefer to assume it is bank, which is printing and stationery 800. First. Printing and stationery 800. Then we have salary 3,500, sundry expenses 1,000. Okay, then we come to petty cash expenses at the branch 500. The expenses paid by the branch, so it's going to come on the credit side. By petty cash expenses, that is 500. Then we have total sales 70,000. So we'll have to find out the credit sales. To credit sales, that is 70,000 minus, I think cash sales are 3,000. So this comes to 67,000. And remittances to branch for petty cash expenses will come twice, 600. Besides this, they've sent for petty cash expenses as well. Showed as to head office 600. And then we have the closing balances. So stock, I'll leave a line here for uh, receipts from debtors also in case there is a loss. I'll leave two lines here. So buy balance carry down, stock, which is 15,600. There's debtors as well. Debtors are 39,500. Sorry, debtors, I'm not going to write this here. We have a small, I'll come back to this, why I've written it that way. And we have furniture, which is 8,000. And we will also have to find out the petty cash. Petty cash we will have to find out. Okay. So I will write we'll have to calculate the loading on that stock first. To stock reserve in brackets loading, that comes to 15,600 into 1 by 5. So that will be 3s are 15, 5 1s are 5, 5 2s are 10, 3120. Okay. Now debtors, we have to write the closing balance here. Leave a line because you'll have to find out that balancing figure. By balance carry down 39,500. Now coming to a very important thing, what we have not done in the previous problem and is there in this problem is the RDD. Okay, now if you notice that I'm not going to be taking the RDD in the debtors account. I'm not going to be taking because the RDD cannot come in the debtors account. Now my question to you is, can anyone tell me why am I not taking the RDD here? But I will show it here. I'm going to show it here. That's why I've written it in the inner column. Can anyone guess why I'm not taking the RDD here? Reserve for doubtful debts. Can anyone guess? Look at all these transactions. Try to kind of get a difference between all these transactions and RDD. How is RDD different from all these transactions that we have noted in the debtors account? And that's the reason I'm not taking it. If you're able to find that difference, how is RDD different? Though it's connected with debtors, but how is it different from all this? What Swizzle has said is what I was actually looking for. Swizzle has said all these transactions have already taken place. If you've noticed, credit sales have taken place. This is the actual opening balance of debtors. The debtors have returned goods. These debts have already turned bad. Some allowances have been given. All these transactions have already been taken place. Even the cash that is going to be received. But what is RDD? RDD is just a provision. RDD is not a transaction. RDD is something that the head office is providing for a certain percentage of the debtors or a certain amount of the debtors that may turn bad. It has already not turned bad. It's not like bad debts. They've already turned bad. This RDD is just a provision that we are making. All this has actually taken place. Now, if I take RDD here, what will happen is the cash, say suppose I'm trying to find out the cash, I will get a wrong picture of the cash. I will get a lesser cash. Okay, I will get a lesser amount of cash. Similarly, if I had to find the balance carried down, I would have shown a lesser amount of balance carried down because I'm not supposed to show RDD here in the actual debtors account because all these transactions are transactions that have actually taken place between with the debtors of the branch. Okay, so that's why I'm not going to show RDD here. But where will I show RDD? RDD is a provision that is being made by the head office that so and so amount of the debtors may turn bad. So when we are showing the closing balance of debtors here, okay, what are we trying to find out finally in this branch account? We are trying to find out the profit. So we are trying to be very conservative when we are trying to find out the profit. We are trying to be very conservative. We are trying to make provisions for all possible probable future losses. That's why we show RDD and we minus it from the closing balance in the branch account. Okay, that means even though our actual debtors show as 39,500, we are making a provision that out of 39,500, there could be a possibility that 3,000 may turn bad in the future, may turn bad. They may not turn bad as well. Is that clear? So 3,000 I'm going to show here because when I'm trying to find my profit, I'm trying to find it in the most conservative manner. I'm trying to find it in the most, I'm being very cautious, I'm being very careful, I'm not over anticipating my profits. Okay, so actually the debtors here, when I show the debtors here, it's going to be 36,000. Is this understood by everyone? Is this understood by everyone? Is it clear? If somebody has not understood why I have not taken RDD in the debtors account and you want me to explain again, please let me know. Okay, so why I'm taking it here is because this is where I'm going to find my profit. This I've done only to find my missing figures. This is actually when I'm finding my profit. And when I'm finding out my profit, I want to find it out in the most conservative manner, not over anticipating it, my profits. Okay, fine. So that's it. We just have to close this and find out the missing figures here. So this comes to 77,82,000. Also, yeah, always write the balance carried down as the last item. That's why I've left this line. Okay, it's always good to follow that format. So buy cash is what we are trying to find out. This would be the balancing figure. So the balancing figure, if we do that calculation, it will be 82,000 minus 13 minus 9 minus 39,500 comes to 40,300. This I will transfer here, cash received from debtors. 40,300. And then we also have to close the petty cash. What is the meaning of this petty cash account? We had initially a balance of 200. The head office sent additional money of 600. So actually we had a total of 800. Okay, but our petty cash expenses came only to 500. So we still have a balance carried down of 300. So by balance carried down, balancing figure is 300. So that I put in the petty cash here, closing balance 300. So the answer is, let's just do the total. Okay, the total here comes to 1,19,700. 1,19,700. And the profit is 12,080. 12,080.